Hi there, welcome to Kneppy Invest and welcome to February 4, 2025. We have about 37 minutes left of trading today, and I'll be honest, I expected a better day. Yes, I expected a better day, although tech's had a really good day, small caps had a really good day as well, and mining's had a good day. I just expect a little bit more from the ASX 200, only up 0.27% with about 30 minutes left of trading. And I just thought maybe with the tariffs being paused, for Mexico and Canada, that maybe a market would rally. But I think what the market is saying right now, we just don't trust Trump. Who knows what he's going to do when it comes to tariffs? He could at any minute place tariffs on any country in the world or any region in the world like the EU. He could place tariffs on Papua New Guinea, Vanuatu, Greenland. And then someone will say, well, Greenland's not a country. It's owned by, maybe not owned, it's controlled. It's governed by Denmark. He could put tariffs on Sierra Leone or Burkina Faso, Djibouti, who knows, or Saudi Arabia, who knows what he's going to do. And I'll be honest with you, we have completely different wavelengths, Trump and I, when it comes to tariffs. For some reason, he loves tariffs. I don't like tariffs. I think they're horrible, and I just don't like taxes. I think we can become much more efficient when it comes to taxes, and tariffs are taxes. So when he says he loves tariffs, he's actually saying, I love taxes. I don't like taxes at all. I think we can become more efficient and lower taxes for almost everyone. But that's just me, and I'm not a politician. What do I know? Anyway, so we're different wavelengths. I think Trump is really volatile. He could do anything at any moment, and who knows what he's going to do. I do know that he does look at the stock market a lot. And if he sees the stock market dropping a lot, he will become concerned. He'll try to, do something to increase the stock market. And he was also fixated on a currency. He wants the American dollar to be lower. And he's also really fixated on interest rates. So he wants the interest rates to drop as well. And unfortunately, many of these policies are quite inflationary, which is not really pro-lowering interest rates. Anyway, this is not another video about Trump. What I'm going to do in today's video, we'll go through the ASX today. Also, I want to have a look at a few reporting calendars. I'm going to have the Market Index Livewire reporting calendar. And someone in the comment section, Paul on Mayo, gave this little link on Commsec. And I usually do like the Commsec reporting season calendar for one specific reason. So I had a look at both of these calendars, just trying to figure out which one is better. And I'm not sure just yet. Someone also mentioned Motley. I don't like Motley. It's too short. Not enough companies in that. By the way, we can actually have a look at that. Maybe. We'll have a look at that maybe. So I'll show you these two calendars, and then we'll have a look at the ASX today, look at the best and worst performing sectors, indices, also companies, and then we'll do the top 5 stocks of the day, including a few that did not quite make it, but I still want to talk about those two companies. And I've also already recorded the stock of the day, which is NuFarm, NUF. I'll be honest with you, another company should have been a stock of the day, but I've already featured this company as a stock of the day in the past. And then if I have time, we'll have a look at some of your comments. Well, we won't have a look. I'll answer your questions or reply to some of your comments. Okay, let's have a look at some of these reporting calendars. And it's really interesting because today's a fairly quiet day when it comes to reporting. Nothing reported today, I don't think. I can't remember any company reporting. And Commsec and both Commsec and Livewire Market Index confirms that. Yeah, no one reported today. So we start to see reporting tomorrow, but the rest of this week, nothing much is happening. It's not until next week where we really see a ramp up in reporting. But on Thursday, 6th of February, we do see REA Group report. Now, I just wanted to compare these two, Commsec and Market Index, and I did notice there are some companies missing from both. For instance, on Livewire Market Index, there's no companies reporting on the 7th of February, on Friday. But if you go to Commsec, they have two companies, Charter Hall Long WALE REIT and Nick Scali. And I really want to see Nick Scali's results because I'm a shareholder. Now, we can confirm this. Sometimes companies will actually release an announcement in regards to when they're releasing results. Here we go. So Nick Scali on the 15th of January, notification results reporting date. So hopefully this is the 7th of February. It is 7th of February. So that's one little strike against Livewire Market Index that they don't feature Nick Scully, which they probably should. But if we go to the 10th of February and look at Commsec, they only have 3 companies reporting: Ansell, Car Group, and JB Hi-Fi. In fact, those are 3 companies I am keenly waiting for their results. I used to own 2, now I own 1, but I want to see how Car Group and JB Hi-Fi are doing. But if you go to Livewire Market Index, they have 4 companies: JB Hi-Fi, Car Group, Ansell, and Ordinate, which is another company's results that I'm really looking forward to. So I think maybe the best way to do this for me moving forward, I will look at these calendars every single morning this month. Might have to have a look at both reporting calendars to get more of a complete overview of who is reporting on each day. I'm just going to show you Motley Fool's calendar. I did have a look at this earlier, reporting calendar. I did have a look at this one. Here it is. This one's a little bit too light on. Yeah, in fact, on the 7th, well, they do actually have both those companies, but on the 10th, they only have Ansell and JB Hi-Fi, so they're missing quite a few companies there. And if you go down the list, yeah, it's not a complete list here. It's a much shorter list, so probably the bigger companies. But you could use this as well, I suppose. But I think you only need Commsec and Livewire Market Index. And to be honest with you don't need either. All you have to do is just, look at the announcements being released on the morning, because most financial results are released before the market opens. Okay, so that's the reporting calendar. Now let's turn our attention to the ASX today. Just notice here, Ordinate shares dive as Morgan Stanley slashes price target. You know my thoughts on broker upgrades or downgrades. I just ignore it, but other investors don't. And I do think there's opportunities there to take advantage of overreactions to broker upgrades and downgrades. And maybe this is an opportunity. Although Ordinate's chart looks pretty woeful right now. Anyway, let's turn attention to the ASX today. And yeah, I'm a little bit disappointed. I expected a better day, although small caps and tech are up pretty good. And if we have a look at the movement on the major indices today, the one thing that is quite noticeable is that the XJO and XO have been drifting lower all day. When the market opened, it was up about 0.7% just after opening, and it has drifted lower, while the All Tech, the XTX, has been drifting higher. Yeah, it's been drifting higher a little bit. So who knows what's going to happen on Wall Street overnight? Who knows what's going to happen with tariffs? Trump could decide to tariff the whole world 50%. And if that happens, the Wall Street will collapse. NASDAQ will drop 10%. I don't think that's going to happen. However, our best performing sectors, we have IT and materials both up over 1%. Energy and real estate both down by 0.7% or so. Otherwise, most sectors either doing slightly good or slightly not so good, but nothing really to write home about. So definitely a bifurcated market with some sectors doing really well, some sectors not doing well, and some sectors don't know what to do. Today, gold's had a good day as well as tech, both up about 1.7%. And the ASX 20 up 0.17%. Okay, let's have a look at the ASX 20 just to see which companies have done well. Medicus has definitely done well, and it is in my top 5 stocks of the day. In fact, I would expect this maybe to be the best performing company in the ASX 20. I expect WiseTech to have a nice bounce. REA Group, probably Iron Ore as well. I would expect Iron Ore to have had a nice bounce. And other than that, I don't know. Let's have a look. I'd say 12 companies up, 8 down. Oh, there we go. And the best performing companies today, let's have a look. Medicus, WiseTech. We also have Rio Tinto, Fortescue, BHP. Yeah, so I actually got quite a few of these right. Macquarie Group, wouldn't have picked that. Westpac, yep. And so it looks like banks have had a good day as well, or slightly good day. And the worst performing companies are Woodside Energy. Oh, yeah, I should have thought that. And Goodman Group, should have thought that as well, because real estate and energy both have had a pretty bad day, and that makes sense. Okay, and I do want to take profits with Aristocrat, and share prices drop. Okay, makes sense. Anyway, let's have a look at the top gainers today. See what I have missed. And a lot of times before I start recording the daily rundown videos, I will have a look at the top gainers and top losers. Today, I have not done that. So this might be a surprise. Okay, so fairly low turnover. Blink Lab, which was recommended by East Coast Research, up again. I don't really care about those sort of things. And Pure Profile, up 18.6% on pretty good turnover. So let's have a look at the chart for Pure Profile. Has been a little bit of chatter about this company recently. A good profit upgrade as well. And this chart looks pretty good. I like this chart a fair bit. Yeah, I don't think you can go wrong. Probably only thing is, I was going to say the volume, but look at the volume just significantly increased today. Did they release anything? I don't remember Pure Profile releasing anything. They did not. Yeah, there was a positive announcement on the 28th of January, a positive business update, and a really nice looking chart for Pure Profile. And I do like the volume coming in. So this could be some sort of recommendation from a broker, or that sort of volume suggests a positive announcement, but that hasn't happened. So this could be just a broker or a fund manager buying some shares in Pure Profile. So good day for that company. As we go down the lists, nothing much. Although WA1 Resources, not in my top 5 stocks, this company did release something and I completely went past it. West Arunta Project, loony metallurgical results. Went past it. The market has liked it. Share price up 11.93%. So let's have a look at the chart for West or WA1 Resources. I'm pretty sure WA means West Australia. Chart, I'm not a fan. I mean, it's not a breakout. Share price is not at a 3-month high. If anything, it's in a downtrend. Yeah, not a fan of this particular chart. And we can move on. What else do we have here? Crypto Innovators down a lot yesterday, rebound nicely today. So let's move on, because there's nothing else here. Let's move on to the top gainers by market cap. And we have Freightways Group. I have no idea who that is. Is this an IPO? Freightways Group, or a change in name? Let's have a look. Freightways Group. I have never heard of this company before. So what I'm going to do, whenever I see a company I've never heard of before, particularly this size, I either have a look at when they listed, and you can do that by market index, and they listed in September 2023. So actually it is a while ago. I've just never had a look at this company before. I just want to see if they actually were or had a different name. No, I just never had a look at this company before. Is this company in my charts or in my watch list? Let's have a look. FRW, Freightways Group. Oh, this is probably why. There's no liquidity, very little liquidity, and yeah, it's not in any of my watch lists. I'm going to just put this in my IPO watch list. Freightways. It might be a New Zealand company, maybe. I don't know. Yeah, this is a New Zealand company. 65% revenue New Zealand, 35% Australia. There's probably another reason why. Low liquidity. The main listing is on the NZX, and they have a dual listing on the ASX. Okay, I think we can move on past Freightways. Good performing companies. Nuix, nice bounce. Appen, bouncing. Cettire, down a lot yesterday, bouncing. So quite a few of these companies were down a fair bit yesterday and just bouncing. Nice to see Demerix and Paradigm bouncing as well. So yeah, nothing of significant note here. So let's have a look at the top losers today. And Xref, I'll talk about Xref. It's in my top 5 stocks of the day. I did mention Xref yesterday because share price is down a fair bit. The company's was going through a takeover bid, and they had a meeting about it. And share price was down 24% yesterday, and I thought something went wrong. We have confirmation about that today. So I'll talk about Xref in a second, and I'll tell you why, show you why. Whenever there's a takeover bid for a company I own, I sell. This is a perfect example, perfect example of why I sell. Other than that, there's nothing here. Low turnover, lots of meh here. So let's have a little top losers by market cap. Tasme, Pack Group, Money Me, it was actually up yesterday, so down a little bit today. Duck Technology keeps on dropping like a rock. I don't know. If they release results which are pretty good, this could be just a significant overreaction from the market. Share price just keeps on dropping. We saw that little bit of a rally back in late January, but it fizzled out fairly quickly, and share price is now at a new long-term low. Not sure what has caused this shift in sentiment for Doug, but it has happened. I'll keep my eye on this one. I was trading it before, and as the share price drops more and more, I become a little bit more interested. And there's nothing here. Fairly boring day, to be honest with you. Okay, so before we turn attention to the top 5 stocks today, I'm going to just talk about 2 companies that did not make it. The first company is, I suppose I'll talk about Briscoe first, BGP. This is another New Zealand-based company, listed on the ASX, not a lot of liquidity. In fact, if you look at the trade history, there's weeks here that there's no trading on Briscoe. And if you just have a look at the summary, there's one buyer. There's one buyer in the buyer list and a few sellers. And the difference between the buyers, or the first and only buyer and the seller, is 49 cents, about 10% difference there. And in fact, the next trade means the share price will go down because there's a seller at 452 and 453. So no liquidity today at all, no selling or trading. But the company did release something really interesting. 4th quarter sales to 26th of January 2025. It's not actually the results that I found interesting. It's the way they worded one of the highlights. So promotional activity drives positive 4th quarter group sales growth of positive 0.96%. But in the second bullet point, they did something I've never seen before. Full year, 52 weeks, group sales, 791.5 million, 99.94% of last year's record sales. So sales down from last year. It's really weird how they've worded or use that percentage. So instead of saying sales were down 0.06%, they've said, well, sales 99.94% of last year's sales. I've never seen that done before. Trying to spin something a little bit negative into positive, because 99.94% sounds so much better than negative 0.06%. So this is the first time I have ever seen a company do that. And by the way, we can have a look at Briscoe on the NZX. I wonder if the share price has dropped. Let's have a look. Oh, it's up. It's up a little bit, 1.93%. And definitely much better liquidity on the NZX for Briscoe. And I found that really interesting, that just the way they worded that, not worded it, numbered it, I suppose, used percentages. And yeah, found that interesting. Hopefully you found that interesting as well. The other company is Peninsula. This company released their Appendix 5B last week, which is the quarterly cash flow report. It's not the quarterly cash flow report that I wanted to look at. It's the quarterly activity report. Now, the share price took a massive hit on the day. Share price down 17.5%. I didn't really notice this until the next day, and then I completely forgot about it until yesterday. And this was a downgrade. Don't usually see downgrades when a company releases their quarterly results, but this was a downgrade. In fact, they've mentioned it. Where is it? Somewhere here. And I'll find it. Somewhere here. And I don't remember it being really difficult to find. I don't remember it. I just remember it saying downgrade. And I don't remember it was... I remember being really high up. Am I looking at the right announcement? I'm pretty sure I am. It wasn't in the cash flow. Oh, you know what it was? It was in the other announcement they released at 9:34 a.m. The update on central processing plant commissioning. The downgrade was in this particular announcement. It wasn't in the other ones. It was in this one. Now I remember. Thank you, memory, for coming late to the party. And yeah, here it is in the key points, the 4th bullet point down. Calendar year 2025 production guidance to be revised with a downgrade likely, and simple enough to understand why the share price has decreased. So the market does not like downgrades. And this company has been a complete disappointment over the last 4 or 5 years. It just seems like they can't get it together. Looks like they're talking about, or they're complaining or blaming weather conditions, challenging weather conditions, and supply chain issues. Now, they have operations, well, they actually don't have operations yet, but their project is in Wyoming. And I haven't read this completely to understand what challenging weather conditions. I hope they're not talking about being cold, because Wyoming is really cold all the time, but this time of year, it's cold. It's really cold in Wyoming. So hopefully they're not blaming cold weather, because that would be weird for a really cold place like Wyoming. Anyway, so that was a downgrade, and that's why the share price dropped. And the other interesting thing about Peninsula, I am a member of some Facebook groups, that sort of thing, and a professional trader mentioned he was looking to buy Peninsula. He thought this would be the low. Don't know why. It has had a little bounce in the last few days, but I could see it going to $1 or just below $1. Did bounce off $1 in November, but yeah, I don't know. The chart looks horrible. And it's a downgrade as well. Okay, so let's go to the top 5 stocks of the day, starting with Xref. I used to own this company many years ago, maybe 4 years ago or so. And one of the reasons why I bought into Xref many years ago was because just before interest rates started to rise, this company turned their attention to becoming profitable and cash flow positive. And then they went away from that for some reason. I'm not sure if it was on purpose or intentional, or if it's just because of the business model. I don't know. And then I sold because the share price dropped a lot. Anyway, then there was a takeover bid from Seek. And yesterday, the share price of Xref dropped 24.4%. Now, this was on the back of a scheme meeting. So the members of Xref will have to vote on this particular takeover. And as soon as I saw there was a meeting, I went, oh, something's gone wrong in the meeting. And I didn't want to say that there's a chance that this takeover bid has been rejected by shareholders of Xref. And fortunately, we did get the meeting results. So results of Xref shareholder vote on scheme. And here it is. Actually, we can look at this one. They're both similar. So shareholder vote on the scheme of arrangement for SEEK to acquire all. Actually, no, we'll look at the other one, because I'm pretty sure the other one gave this was so both Xref and SEEK released their own announcement. So we're going to have a look at the Xref. The other one was SEEK, because there's a few numbers in Xref's announcement. Yeah, SEEK was much shorter. So the scheme was approved by the requisite number of Xref shareholders, but was not approved by at least 75% of the votes cast by Xref shareholders present and voting at the meeting. As a result, the scheme was not approved by the requisite majorities, and as such, the takeover bid has been withdrawn. Following the results of the scheme meeting, Xref and SEEK have agreed to terminate with immediate effect the scheme implementation deed. So that's why the share price dropped a fair bit yesterday, and that's why the share price has dropped today. And I suppose a lot of people selling today probably wish they sold yesterday after reading this news. Anyway, so down a fair bit in the last 2 days, and this is the reason why. I'll show you the chart for Xref. This is the reason why I almost always sell out when there's a takeover bid for a company, because sometimes they fall apart, like this one. So you could have sold Xref for like 21 cents not that long ago. You had a lot of time to do it. Now, there was a bit of a takeover bid war, I think, or maybe SEEK just increased the takeover bid back in October, but now the share price is 12 cents. So share price is almost halved. This is why I always take profits. I've been told by some people, well, what if there's a bidding war? Bidding wars don't happen all that often, and more likely the share price will drop. More likely the bid or the takeover bid will go through, and you don't get much of there's not much of an upside if the takeover bid does go through, but the downside is significant if the takeover bid doesn't go through or it fails like it has here. So this is why I always sell out when there's a takeover bid. I don't care if there's a bidding war, and I don't care if it goes through. I'm just protecting my capital. Anyway, and this is a good example of protecting your capital. If I was a shareholder, I would. Yeah, anyway. So that's Xref. Coming in number 5. Coming in number 4, we have Intelligent Monitoring Group. One of the reasons I'm was anti, maybe not so much now, one of the reasons I was anti-Intelligent Monitoring Group was because of the debt. This company had significant debt on a high interest rate, and their financing costs were quite high. And I think it did put a brake on the expansions of this company and the cash flow and the profitability of this company. And then I saw the IMB debt refinancing, International Monetary Fund, not International Monitoring Board, no, Intelligent Monitoring Group, debt refinancing. And this was a pretty good debt refinancing. In fact, they mentioned here, the new facility is up to 122.5 million. Do they really need that much? But their debt is at 81 million. The interest rate implied on the new facility will see Intelligent Monitoring Group rates drop from 15% down to 7%, or approximately 7%. This will result in a significant, more than $6.5 million per annum reduction in interest expense for IMG shareholders and also the company. They also talk about a confident ratio when it comes to gross debt to EBITDA. If we just have a look at the most recent cash flow report released last week, I think I did have a quick look at this in the video. I definitely had a look at it in real life. And the one thing that was really noticeable is if this company didn't have any debt, they would be hot, maybe not highly, but definitely free cash flow positive because their interest in one quarter was $2.7 million. They were operating cash flow positive by 491. So they would have really nice cash flow if they did not have any debt. So that's one of the reasons why I was not a big fan. Maybe my thoughts on this company has changed a little bit. Seems like the market has liked it, understandably so. And the chart had been under pressure recently, so maybe this is a good day for this company. Yeah, so nice support level at about 47 cents. Hopefully that is clear why that level of support was resistance, became support after July last year. And you can just see it's been testing. Share price has been, or the market has been peppering this company at 47 cents. And whenever it gets to 47 cents, we see some buying coming in. Other than that, chart is not the best. Last time share price was this high was not that long ago. It's like 1 month ago. So it's a 1 month high. So based off the 1 month high, not a breakout or anything like that. But they're moving in the right direction, refinancing the debt. Good work, management of Intelligent Monitoring Group. Coming in number 2, we have a company I do own, WTF, I like to call them, and I think this would have been a perfect ticker code for WT Financial. Oh, I reckon they didn't. I think they didn't choose this one because WTF, it's, anyway. Company did release half-year indicative results, and the share price is up 13%. And to be honest with you, understandably so. Interesting enough, even though I'm a shareholder of this company, and this is not a trading company, this is more of a, I see value, and because I see value, I'm going to keep holding these shares for a while. Because not only do I see value, this company is profitable. This company is profitable and I see value. And those sort of instances, I want to own a company shares for a while to possibly take advantage of that undervaluation. One of the things I did get wrong about this company, when I saw this announcement, I went, oh, what's the market cap of this company again? I was thinking, oh, it's about 60 million, 70 million. Then I looked at their half-year results and went, oh, maybe there's not any more value there anymore. And then I had a look at market index and I completely overvalued this company. I thought it was like 60, 70 million. It's only 44.5 million after the share price rising. So that's actually makes me think it's still undervalued. And the reason I say that is because this company has experienced some pretty good growth. So underlying revenue up 33.5% and underlying net profit before tax up 35.8%. So pretty nice growth there. The one thing I don't like about this company is the margins. The margins are pretty crap. So we're talking about revenue of 106.3 million with underlying net profit before tax of 2.45 million. So really crappy margins. And that's the one thing I don't like about this company. It's just the margins. But I do think there's value there. And I think the reason there's value there is because I think the rest of the market doesn't like the margins either. So they're willing to pay or not willing to pay a premium for this company, which is understandable. But anyway, I see a bit of growth. And if they can continue to grow, expand the margins, I think you could see margin expansion and also multiple expansion, and then also the share price and revenue and profit expanding significantly as well. And the valuation of this company could explode over the next 5 to 10 years if that happen. So I actually did like this little update from the company, and looks like the market has liked it as well based off the movement in the share price. Although you can see there's a bit of a difference between the buyers and sellers right now. So if someone needs to sell, the share price will go back down to where it started. So you have to keep that in mind with this company. It is volatile, and the liquidity is not as good as what you want. But my other hope is the liquidity in this company will improve if the financials improve. And if the financials improve, they remain profitable, increase their revenue, increase their margins, you get fund managers becoming interesting. And when fund managers become interested, you will see liquidity improve. A great example of that is Shape Australia. Great example of that, which has happened over the last year. Great example of that is Tunis Plus. In fact, let's have a look at the chart for both of those. And you can see, and I'm just using the share price as it goes up. So this is Shape Australia. As the share price has increased, we've seen a little bit of an increase in liquidity. It's subtle, but it's definitely there. And this is a beautiful looking chart. And the other one was Tunis Plus. Definite increase in liquidity for this one. In fact, one of the reasons why I stopped trading this, I was trading this, and then I got out was because of liquidity. And then I bought for the longer term. So when I stopped trading this was way back in mid-2023. And I just had a little bit of issues with liquidity, and definitely a little volume really increased over the past 6 or 7 months. So that's an instance where more and more fund managers get interested in the company. You see an increase in liquidity, and the share price just keeps on going up. Could keep on going up. Has been going up. Okay, so that's WT Financial. Ticker WTL. Oh, by the way, I totally forgot to show the chart. Okay, so... Oh, yeah, I completely forgot. The share price of this company went bananas a few days ago. I was like, what's happening here? Loose lips? Someone new? I don't know. It's very rare to see the share price pop up like that. But the chart actually looks pretty good. Looks pretty good. And we saw a few instances in the past year where we have seen a bit of an increase in volume. That was back in March and also August. So around the results. So in late February, early March, increase in volume. And then, when they released the results in August, increase in volume. That's when I actually discovered this company, when they released their results in August. And then the share price has popped higher. So go WT Financial. Coming in number 2, Pro Medicus. Share price up 5%. 5% for a company that has a P ratio of 300. PE ratio, I was going to put PE ratio into symbol search. I think TradingView has it probably 300. Let's confirm that. PE ratio of 341. So this company has a PE ratio of 340. So you have to wait 340 years to get sort of a payback. So you're not going to wait 340 years. So the market is really expecting some significant growth in revenue and cash flow for this company over the next few years. And I wouldn't doubt the company to do that. I wouldn't doubt the company to see massive growth over the next 5 years. It wouldn't be surprising if their profit, grew tenfold over the next 5 years. It wouldn't surprise me at all, because the company keeps releasing these sort of announcements, new contract wins. It just keeps happening time and time, or month and month again. In the last 2 months, they've released 4 contract wins. Don't forget, these founders sold 1 million shares each in early December. And there was a massive contract signed on the 28th of November, just before that, a $330 million 10-year contract with Trinity Health. Just before that, another contract. The last 3 contracts were combined, about $78 million over 7 years or so. And the new one is a 7-year, $53 million contract with Baycare. By the way, half-year results being released on 13th of February. Just over a week from now. Anyway, so another really good contract win for Pro Medicus. And the company just can't do anything wrong. So one of these contracts wins in isolation is sort of like a ho-hum for me. I don't care. But when you keep getting these contract wins, just time after time again, it all adds up. Eventually, it all adds up. And that is what is quite impressive around this company. And the share price just keeps on going up. Another all-time high today. What can you say? What can you say? There's, even yesterday, wasn't much weakness in the share price when companies like this should have been sold off. I don't know. This is, what can you do? Oh, I'm a shareholder. I've been a shareholder not that long, I'll be honest with you. So I bought some shares. There it is, $55 back in 2022. And it's nearly, it's more than a 5-bagger since then. And I just see the valuation and go, should I sell just based off valuation? But the share price keeps on going up. And I know some people who have completely take profits in this, and I'm thinking, why? Look at the chart. There's no reason to take profits just yet. So that's where I'm at right now with Pro Medicus. I think it's really overvalued. Well, maybe it's not. I just don't know. Anyway, so that's Pro Medicus. And if I do take profits, I won't be selling everything. I will maintain a pretty big holding in this company. It's actually probably my biggest holding right now. It's probably my biggest holding right now. Yep, I think it is. Anyway, so that's Pro Medicus coming in number 2. The stock of the day was NuFarm. I'll be honest with you, Pro Medicus probably should be stock of the day, but I've already featured this company as stock of the day. So I decided to put or have NuFarm as a stock of the day. Look out for that video. I should release that video 2 hours after this one, so on Monday or Tuesday evening. A low-quality company. The share price is at an interesting level when you look at the chart, the long-term chart. It's at a support zone. Definitely not a high-quality company. In fact, the share price right now is the same level it was back in 2010. They did have the AGM and a trading update. I only cared about the trading update. I don't care about the AGM speeches or any sort of voting. I just cared about the trading update, and it was positive. Not overly positive or extremely positive. It was positive, but no breakout in the chart. Anyway, so that's NuFarm. Okay, so let's have a look at some of your comments. So Paul on Mayo, thank you for that link. In fact, I might put the links of both the calendars in this video. Might do that, yes. Oh, and then nice 00742. Regarding your comments about calendar of ASX companies results, Motley has one for February. Yes. AI at Perplexity can also make it if you type in make a date wise list of ASX companies that will release results in February. That's a good thinking. Good thinking. I actually didn't think of that. But yeah, yeah. So Perplexity, huh? But ChatGPT doesn't do it well though. Okay. Jennifer Paulo Hernandez Guzman says M. Good movie, M, by the way. 1930, I'm going to say 1930. Fritz Lang, maybe? M movie. It's about a serial killer in Germany. What's his name? I forget his name. Peter Law. Yeah. So 1931 German mystery thriller film directed by Fritz Lang, starring Peter Law. Yeah, I did watch it many, many years ago, and about a serial killer, and he whistles. That's the one thing I remember. He whistles, and that's how you know he's. It's a really good movie, really good. Yeah. Anyway, so 100% on Rotten Tomatoes. There you go. Anyway, why was the movie M so important? The film was released at an explosive time in German history. I suppose it was 1931. Explores modernist themes to great effect, particularly those surrounding mass culture. Besides epitomizing Weimar culture, M is also noteworthy for its use of sound. New for its time. What did I say? Whistling. Yeah. I suppose that's true. Yeah. Films would have went from silent to sound probably just before that. Anyway, sorry I went on a bit of a tangent, but M, as soon as I say the letter M, I just think of that movie. Happy Now. The late night wrap-up sums up everything I need to know about today. Indeed, I wonder if the tariffs will disappear. Well, maybe. Who knows what Trump is going to do. I was going to say what tariffs are going to do, but I suppose Trump might change his name to tariffs because he loves the word tariff so much. Fishball, ERM and PPL looking bullish. I've already shown the chart of PPL, Pure Profile. It looks really good. was up today when the market is down. That's another good sign. When share prices of companies are up, when the overall market is down, that's showing a bit of strength. So we'll have a look at ERM, which is that Emmerson? Emmerson? It is Emmerson. Emmerson Resources. Gold Explorer. Oh, yeah. Look at that chart. So when I say chart, share price action and volume. Look at that. I don't know what's happening with this one. It's an exploring company. I don't have much interest in exploring companies, but I do have interest in charts, and that chart is one hell of a chart. An investor presentation released a few days ago. Yeah, and I'd say they're not in production, I'm assuming. I don't remember this company popping up. No, they're not in production. Anyway, but the chart looks pretty good. My only problem with these type of companies is because the share price has increased a fair bit, we could see a sell-off at any moment. And share price could pull back a fair bit, but I do like the increase in volume. So thank you for that, Fishball. Here's a random comment. Remember Redbubble? Yes, it's now under a different name called Artichoke. I just remember it as Artichoke. It's now trading as ATG, yeah, Artichoke. Oh, yeah. Articore. I think it's Articore. Yeah, Articore. I just call it Artichoke now. And they're choking. The share price is choking. Check it out. What a joke of a company. Funny enough, when they were known as Redbubble, this is probably back in 2018, I wanted to buy, when I went overseas to America, I was buying one shirt a day. I still wear those shirts. And there was a couple of days I didn't buy, so I went to Redbubble just to see if I could buy some shirts, commemorating my trip over there. And one thing I remember was how expensive it was. So anyway, so Articore, I don't really follow this company at all. I do remember talking about this because they released a negative update. I just remember they released something negative not that long ago, trading update on the 30th of January, which is, yeah, not that long ago. And the chart just looked horrible. I do remember that. Yeah, the chart looks horrendous. This is a horrible, horrible looking chart. Maybe it's at support, long-term support. No, share price is at all-time lows. So if share price is in all-time lows, there's no support. Share price as high as $7 not that long ago. And this is the what I call the what's that mountain? The Matador. Matador? For some reason that doesn't sound Matterhorn. Matador. This is the Matterhorn signature. Share price go up the side of Matterhorn and down the other side really quickly. Okay, so the Matterhorn pattern. I spent 5 days in Zermatt, where you can see the Matterhorn. Electric vehicle city or town, so no internal combustion engines allowed in that town. One of the nicest towns in the world. It is expensive. We stayed in a hotel or a motel, and our room was, when you're sleeping on the bed, open up the windows, you can see the Matterhorn in the background. Oh, beautiful. Went skiing there in Zermatt quite a few years ago. In fact, over 10 years ago. And that's why I call these patterns Matterhorn. Just give me nice, memories flooding back. That's why trips, holidays are so important, because it's all about memories, building memories, that sort of thing. Anyway. Scott, someone should explain how tariffs work to Trump. They have tried. People have tried to explain to him, but he just says, no, you don't understand. The country you put the tariffs on, pay the tariffs. It doesn't work like that. Because he might like tariffs, but seems to have no idea how they work. He doesn't. Now, he could be lying. Maybe he does know how tariffs work. He has mentioned he loves tariffs. He can't say he loves taxes, but that's what tariffs are. For those who don't know how tariffs work, so, for example, if Trump puts, or America puts, by the way, back in the 30s with Smoot-Hawley, tariffs went through legislation, I believe, and now, because of what happened with Smoot-Hawley, again, a tariff act, which was disastrous for not only the United States but the world, they changed it. So now the president has control on who to put tariffs on, which is now disastrous as well. So anyway, so for those who don't know, what happens is, so Trump puts tariffs on China. China doesn't pay the tariffs at all. And just think of it this way. Just imagine if another country could put taxes on you, because that's what tariffs are, they're taxes. Just imagine if another company puts taxes on the people of the country. No way would that work. Anyway, so China imports or exports their goods to America. Importers take those goods, American importers, and the American importer has a list of all the tariffs they have to pay. They have to pay. And so they have to pay the tariffs when it hits the American ports. And that's who pays the tariffs. It's the importer, the American importer. American companies pay the tariff. And then what do they do with those increases in costs of those tariffs? They pass it on to the consumer. That's why tariffs are inflationary, because prices go up. Most of us know this. We have seen this in Australia. Tariffs are used to protect industries. I'm pretty sure we saw that with the car industry in this country. They use tariffs to maintain the car industry. Anyway, so that's who pays the tariffs. It's a consumer of the country. And for some reason, Trump is talking about getting rid of the income tax and just getting all this income from all this revenue from the tariffs, and thinking overseas countries are going to pay the taxes. But it's just nuts. It's just nuts. Anyway, and I really think that if anyone wants to go for presidency in the United States, they have to understand how tariffs work. It should be one of the number one rules. Anyway, Forrest Hill also says he's a moron in many ways, but I'm sure he understands this part. This is just how his way of bullying, negotiating, because he knows a trade war will hurt Mexico and Canada more, and they'll give it in his. That could be true. That could be true. He's a bully. He's definitely a bully. But the problem is, when you are a bully and you have allies, you don't want to go down that route, because there is a chance if he does go down this route, he's looking like he is, he could destroy relationships pretty quickly. And he might be, or they might be arrogant enough to think they don't need relationships with other companies. All countries need relationships, because if they try to do it themselves, they're gonna fail. And United States needs Canada for a lot of stuff. He keeps saying we don't need Canada to survive. They need Canada. Anyway, and we've started to hear that Canadians are turning on Americans pretty quickly. We're seeing booing of the national anthem, the American national anthem at sports games. Some of the what do you call them? Not the governors, whatever they call them, the provinces governors, what they call them, are now banning like American alcohol, that sort of thing. Anyway, I think this could turn really against Trump if he really moves into this bullying tactic. I think it's going to be fairly negative for him. Okay, Rick Thellian did hear about it on news feeds weeks back, but missed the whole story, but posed that. Not sure what. First comment from Sensei. Thanks for another great insight. This really plants seeds. Talking about NuFarm, stock of the day, in the mind on so many levels. It's a bummer your video will be later tonight, but I'll stay up to see what you think and see in all the days of my short investing life. 7 months. I think the first massacre on the stock market with a huge change in tariffs and people's views. Can't wait to see what you think and how badly or good your portfolio has gone. I'm not surprised what's happened today. I'm not surprised there was a sell-off. I think Trump was surprised there was a sell-off. It's not surprising that he paused Mexican tariffs just after the market opened. About 1 hour after the market opened, he paused tariffs on Mexico. He probably saw the market was diving and went, oh, damn it, because he does pay a lot of attention to the way the stock market is going. He thinks that's how we view his presidency, how the stock market's going. Millsy, 1704. What do you think of VRX Silica chart? It's been going sideways for 3 months after huge falls the previous years. Could be because they're nearing sign-off approval for their mine by their environment minister in the next few weeks. Worth taking a short-term position. I'm pretty sure this popped up on my radar, the chart anyway, not the company itself, but just the chart, not that long ago. Yeah, this popped on my radar. Because downtrend has come to an on the daily chart. Moving average crossover probably came to my attention on the 18th of November. Share price has gone sideways since then. I like the volume increase as well. I would also say there's a lot of opportunities on the market. Just because I might not take a trade position in this doesn't mean you don't have to. If you like it, go ahead. You have to make decisions yourself. Empower yourself to make decisions. Don't rely on other people to make decisions for you. So don't rely on brokers for upgrades and downgrades. Make your own decision. And I'll be honest with you, I don't see anything to dislike about this chart right now. It could go sideways for a long time, so maybe be patient, but that's all I know. I don't know anything about this company. So thank you for that. Thank you for that, Millsy1704. Landy Lee, and this will be my final answer for the day. What are your criteria for a high quality company? I probably should do a standalone video on this, so I just have that there. Criteria for high quality company. Okay, so when I first start researching a company, the first thing I look for is revenue. Is revenue growing? So for instance, Commsec, revenue is growing, but very slowly. So I need it to be growing at a certain percentage. Typically, I think above 5%, but I really want at least above 10%. So Commsec, not a high quality company based off my criteria. So some of you might disagree with that, but that's okay. We also have our own definitions of stuff like this. And what I will always do, preferably it's revenue per share. That's the other thing I should say. And I was a subscriber of Guru Focused, and they use revenue per share. A lot of other platforms don't. So let's have a look at CBA. And I would not call CBA a high quality company simply because they have very little revenue growth. In fact, over the last 5 years, it's 3.2% per year. That's just not high enough. Earnings per share is only 0.7% growth over the last 10 years. It's just not high enough. And even dividend growth over the last 10 years is 1.5%. So this company's not growing. It's not growing at all. P/E ratio is 28.5. That's ridiculous. So that's the first thing I look at is revenue growth. Is revenue growing? Another thing I look at is I look at revenue stability. So revenue can be growing, but I like to look at the long term. So for instance, BHP is a mining company. So there are times during BHP's history where revenue will drop a fair bit, particularly if iron ore drops a fair bit. Hello, 2016. I would not call any mining companies high quality. BHP would be the nearest one because I do think over the long term they will grow, but I can't say that about many other mining companies. So I tend to just naturally exclude any mining companies from any talk of high quality. And one of the reasons behind that is, again, they're cyclical and they are price takers, not price makers. So another thing I look for is margins. So I tend to focus on gross margins first. You can tell a lot about a company just by looking at the gross margins. A company with high gross margins, well, first of all, they tend to have a bit of pricing power, but there's a bit of you could say a company with high gross margins have a bit of a moat. There's something unique about that company because if they wouldn't be able to sustain high gross margins, then a company would come in and sort of attack that company, particularly if they don't have a moat. So you'll see a lot of those companies lacking in moats have really low gross margins. Another thing I'd like to see is whether gross margins are rising or dropping. So sometimes a company can not have a moat and then actually develop a moat over time, particularly if they have a brand. So every company or every brand you know right now at one point didn't have a brand, like Apple. So there are people who just buy Apple because it's Apple. So there was a time when people wouldn't do that. So over time, Apple has built their brand. And a lot of times you can just see gross margins increasing. And that's a good sign as well. Of course, gross margins can't increase infinitely so. They can only increase to 100%. So I definitely look at margins. And I don't want to see margins dropping. I want to see margins at least going sideways at the best or at the worst. So I look at revenue, margins. And then the next thing I look at is what I define as quality metrics, which is return on equity, return on invested capital. Those are my two favorite. And they just give a good idea how efficient a company is at generating profit. I suppose that's a good way to say it. So return on equity, I typically look above 10%, prefer above 20%. And if you do just invest in companies that have return on equity above 20%, growing revenue, high gross margins, over the long term, more than likely you'll do fairly well but you have to find those companies, and also valuation matters as well. You just can't buy those companies at any price. Price matters. So if a company has a P/E ratio of 295, maybe it's expensive, but maybe the company is growing a fair bit. So have a look at revenue growth. Would I look at, so those are quantity metrics, things. I don't tend to focus much on qualitative things. Qualitative, yeah. Sort of like management, that sort of thing. It's really hard. It's really hard to, it's really hard. Some of those things are really hard to do. It's just based off your own feelings. And I like numbers compared to feelings. I've heard someone, an expert say, I won't say who, he's moving towards just having vibes about a company. I'm going to invest in this company because I've got good vibes. It's like, he's like, I need some information about a company. I don't care about vibes. And his thinking was, well, I'm experienced now, and I'm going to trust my vibes. I'm sorry, I'm not like that. Anyway, so everyone has their own ideas of how to invest, and that's my things I look for in a higher quality company: revenue growth, high margins, and nice high return on equity or return invested capital. Okay, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.